Welcome to Commodity Analysis. It's the 27th of March, and we're doing a E-mini S&P in-depth recap and look forward. I just want to first of all show you the current situation, but I want to just before I do that, actually, I want to. I don't know if anyone's new or not on the course, but if anyone's in any doubt about the ability of these reaction lines to affect price, I just want to flick through back through. The last couple of years, just on this daily chart, if you have a look at these lines and the price distribution around them, you'll see they're incredibly powerful tools. You know, we've identified about 16 to 18 reaction line patterns that are constantly and consistently seen and repeatable, and then there's about another 10 reaction and median line combinations of the two, where you get reaction lines with median lines. But just have a look at this. Some of these moves are profound. I mean, that's got to be 150 points there. We're going from the mid 1430s down to 1250. Anyway, let's go back to today. Let's go to the 240 minute and have a look at what's going on. We've got this fork that's been supporting price, and you can also see, let's go back to the 240 minute. You can see these reaction lines. That one had quite a struggle for price to get through it, and you see when it does get through, it pops up. And that's what we're doing here. Now I'm going to go into, because there's several studies on there. It looks a bit of a bird's nest, but don't worry about that. We're gonna go down to the hour. In fact, we're going to go lower. First, before we go lower, I just want to show you what's been going on. We've made a series, as everyone can see, we've made a series of higher lows and higher highs, successive higher highs. That's a very healthy situation. So the market, as far as I'm concerned, the trend is intact. Having said that, no one wants to be involved in, on the long side. See anything like that? That's a pretty nasty business. So let's have a look what we're doing here. First of all, we're using an unorthodox fork. You'll learn about this if you've done the course. You'll know about it. This is an F&L, and you can see the reaction lines moving around. It should be, if we get a tick out of our broker. There you go. Using this type of fork will give us the let's just refresh it. There it is, and it's this line here, and you can see it worked a treat there, and it's a resisting line, the first resisting line that you come to, and that is explained in the course. I don't want to go too much into that now. I really want to concentrate on the Emini S&P. So look, what we've done here is we found support again on in and around this line here. I'm going to go to a different study in a minute. This was you can see this reaction line here is from a daily fork. Let's just have a look which one. It's number 10, off fork number 10, and they're all graded, so it's an important fork if it's in the top 10. And that's drawn. These are all historical forks going right into the weekly and monthly time frame. So it's an important event for price to get through it. And you can see just here, even before it touched it, it just melted away, retraced some of this sharp move up, and then went through. You can see if we go down to let's have another look at that. There you go. Now you'll notice I'm in the 30 minute. I've drawn over the original reaction line. Again, this is another concept that you'll be introduced to. I've drawn over the original line because as we go down, you'll see that it's moved. So we're getting more than one area of resistance. The line location is something that's incredibly important. Anyway, we went through, and there is no single one line that's in play. There are hundreds and hundreds of lines. So what we're trying to do is just use the most important and be able to gauge price and price momentum in how they behave around the lines, and of course to find support and resistance levels for trade entries. Let's just have a look here. We came down. This is a combo area. We've got a downsloping reaction line, and then we've got an important median line, which is in thick black there. We've also got an upsloping reaction line. In fact, we've got a whole band of them. We've got a whole bucket full of upsloping reaction lines that you can see if we go into here they are. and they've supported price here. Even these tiny candles, all this behavior you can see. The lower down you go, and look up there, price was held and carried higher in this little area here. Anyway, I'm going to go to another template now. Let's have a look at this one again. Here is a local fork. I say local, what I mean by that is it's a fork that's been drawn in a relatively low time frame, using this low here, which is an important pivot. When you get an extended move up, you're never quite sure, and you can draw forks from. And you see, I've drawn one from that one there. They all work, and I'll tell you how you know they work, because of the reaction lines. If you're drawing the reaction lines with them, and you see price interact at that level, these pivots, all we're doing is expressing the relationship between that, and that pivot there. Okay, same with this one, and there are an infinite amount of pivots, but what we're trying to do is just make sense of price, and that's exactly what we're doing. Now you can see, you can see from this fork we have a parallel line almost on top of this very important upsloping reaction line, and there's that beautiful inverted head and shoulders that we were talking about last week. One of the great trade opportunities. We've got a median line there, number 2. That's an important fork. You can see all these patterns take on new meanings when you see them bisected by reaction lines. So here we are. We've got this sideways rising pattern. It's similar to actually what we saw in the daily Emini S&P last June. If you have a look at the pattern there, it's pretty much similar. And here are price encountered downsloping reaction lines. So let's go down. This is the same price action, the same candles that we just looked at on the other template. Okay, here's our pattern 1, 2, 3, 4. We may get another, but I suspect we will retrace some of today's move. But I think this pivot will hold. We'll have to see how price copes with this line here. You can see all of these lines have, all of these reaction lines, all of these median lines have an effect on price. We don't want to clutter up the workspace too much, but it is absolutely essential. And that's a nice, there we are. That's a nice uncluttered chart as far as I'm concerned, that reveals quite a lot. There we are, perfect. There's the previous pivot from the 25th of March, a couple of days ago. Again, you don't get clean distribution. Very occasionally you'll see a perfect bounce, like bounces off the head of a pin. But more often than not, price is never that easy to read, as everyone knows, and you'll get behavior like this. When you view that, obviously, in the 60-minute or the 240-minute, that will just be one candle with a small penetration into the line. This is by no means a mess. Let's have a look. There's another one. So what we need to do now is work out how price is going to cope here. Having bounced and made a new low, a higher low, excuse me, here. I guess we could come back to the mid-50s, but we will need to break through or fail, of course. We may well test 1550 again. If we go back to the previous chart, we have broken through this line, which is a different reaction line, downsloping resisting reaction line, and you can see the effect. We now have the FNL line to cope with, and also this set of reaction lines here. We'll have to see how price does, but I hope this has been informative for you. Thank you very much.